Okay, this is a pretty straightforward problem. We're given an adjusted trial balance and we're asked to create an income statement, statement of retained earnings, and a balance sheet. So we've completed most of the accounting cycle. We've analyzed our transactions, we've created journal entries, we've posted those journal entries to their T accounts, then we created a trial balance, then we made adjustments to those accounts, then we had an adjusted trial balance, and now it's time to create our financial statements. And part of the elegance of this whole system is if you look down here at the bottom of the adjusted trial balance, you see that we have all the accounts we need to create our income statement. Remember, it's revenue minus expenses. It's not cash minus expenses, it's revenue minus expenses, and it's all right down here at the bottom. This company calls their revenue fees earned. They might have called it sales earned. They might have called it medical fees earned. They might have called it fees. It doesn't matter what they call it. It's a revenue account. It's money that they've earned. Whether they've been paid or not is another matter. So first, let's create our income statement. We put the name of the company at the top, the title of the statement, the date, and then it's revenue minus expenses. If you wanted to, you could set these guys, the expenses over here in a separate column and total them up and come up with 2,900 and subtract that from 5,500. Doesn't matter. This is a single step income statement, which just means we don't strike a subtotal for cost of goods sold and gross profit and things like that. So revenue minus expenses gives us net income of $2,600. If we go back to our adjusted trial balance, we can see that we have everything we need to create our statement of retained earnings. Okay, I asked my students to memorize three things. Expenses are debits, expenses are debits, expenses are debits. The journal entry for depreciation expense is debit depreciation expense, credit accumulated depreciation. And the statement of retained earnings is retained earnings at the beginning plus net income minus dividends gives us retained earnings at the end. This company tells us that retained earnings at the beginning were $0. We just figured out their net income is $2,600. We subtract dividends of $1,500 to give us retained earnings at the end of $1,100. And to create our balance sheet, all those accounts are right up there at the top. So it's all very mechanical from when we get to creating the financial statements. On the left-hand side are our assets. Cash is the first asset we always list. Then we have equipment of $13,000 minus accumulated depreciation of $1,000 to give us a net book value of $12,000. Remember, accumulated depreciation is a contra asset account. It hangs out with the assets, but it has a credit balance. So that gives us total assets of $27,100. Liabilities and owner's equity are over here. Notes payable $20,000, common stock $1,000, additional paid in capital. That is money paid in above the par value of the stock. That's why it's called additional paid in capital. And our retained earnings, we just figured out that that's $1,100. So you add up the right-hand side of the balance sheet and you get $27,100 on the right-hand side as well. The second part of this problem asks us to close out our temporary accounts. In other words, it's the end of the year, so we've got to start counting our sales all over again. It's the end of the year, so we've got to start counting our expenses over again. It's the end of the year, so we've got to reduce our retained earnings by the dividends that were paid out. Or another way to think about it is that these are big buckets to capture information, and we have to empty those buckets out every year and start capturing the New Year's information. Another way to look at it is retained earnings at the beginning plus net income minus dividends gives us retained earnings at the end, and that's exactly what we're about to do in this step of the accounting cycle. So we've got our fees earned with a credit balance of $5,500. How are we going to make that $0? We're going to debit it for $5,500. And if we could debit one account, what account are we going to credit? We're going to credit income summary for $5,500. All our expenses have debit balances. To make them $0, we're going to credit them. And we're going to move them into income summary. So let's take a look at what those journal entries look like. We take our fees earned, we credit, it has a credit balance of $5,500, so we debit it for $5,500, and we credit income summary for $5,500. We take all our expenses and credit them, so they $0 out, and debit income summary. And when we do that, if we posted all those, I won't post them all now, but if we had $5,500 of revenue and then we had $2,900 of expenses in our income summary, the balance in this account would be $2,600. And remember, we made $2,600. That's our net income. That's why this account is called income summary. Retained earnings at the beginning plus net income. So let's take this $2,600 balance and move it into retained earnings. Retained earnings is an equity account. It's on the right-hand side of the balance sheet. So as we make money, it would make sense that it would get larger. So sure enough, we take that $2,600 of net income, which was stored briefly in income summary, and move it into retained earnings. We also have to close out the dividend account. So we debit retained earnings to reduce it by the amount of the dividends. Dividends have a debit balance, so to make it zero, we have to credit it. So big picture, when we get to the adjusted trial balance in the accounting cycle, it's easy to create the financial statements. The income statement is hanging out down here at the bottom, revenue minus expenses. The revenue could have different titles, but it's the same concept. It's money that we've earned, whether we've been paid or not. The accounts that we need to create the statement of retained earnings or statement of owner's equity are usually hanging out in the middle here. I put them in blue. And then the accounts to create our balance sheet statement are right up here at the top. Assets go on the left-hand side, liabilities known as equity go on the right-hand side. So I hope this helps clarify creating financial statements from the adjusted trial balance and the process of closing out our temporary accounts, or nominal accounts sometimes they're called, so that we do exactly what we memorized. Net retained earnings at the beginning, plus net income, which comes from income summary, minus dividends, which comes from the dividends account, gives us our retained earnings at the end. I hope this helps.